Most people enter the crypto market following a common pattern. They buy a coin based on social media hype, hold it indefinitely, hoping for a miraculous 100x return. Without a systematic plan, these traders often hold on as their investment value evaporates. There is a different path used by institutional-grade traders. Instead of hoping for a lottery win, you can learn a live, step-by-step system for identifying sudden volume trends and securing a 20 to 30% profit on a daily basis. You don't need complex hardware to start. A laptop, basic capital, and specialized tracking tools are the only requirements. In 2026, volume is flowing heavily into networks like Solana, making it the primary ecosystem for these rapid execution plays. Treating Memecoins as a vehicle for skill-based execution rather than a lottery ticket is how you move away from gambling and toward consistent results. Step 1 is identifying where the volume is moving in real time. By utilizing a Discover page and filtering for spikes in the 1, 5, and 30-minute intervals, you can locate tokens that are gaining immediate market traction. The modern crypto landscape is a virality market. The tokens that move the fastest are almost always tied to recognizable internet lore or emerging AI narratives that have already captured public attention. These narratives usually have a catalyst, a single post from a high-profile cultural figure, or a retweet from a reliable crypto source can trigger a massive, sudden influx of trading volume. We look for one specific confirmation, a token experiencing a significant surge in trading volume within the last 30 minutes. Identifying these surges instantly is vital. If you wait until a token has already peaked and the volume is slowing, the opportunity for a scalp has already passed. Step 2 is validation. Once a trend is spotted, you must verify that the movement is being driven by experienced market participants. Virality alone doesn't guarantee a sustainable price pump. Blindly guessing which trending coin will actually run is where most traders lose their capital. To confirm a move, we use a wallet tracker. The specific buy signal occurs when you receive a notification that a smart money wallet, one with a proven history of profit, has officially entered the token. When these market movers enter, it often precedes an immediate surge in chart volume as other traders follow their lead. Relying on wallet tracking shifts the odds in your favor. It transforms the trade from a guess into an educated entry backed by the players who actually move the market. Step 3 is the mandatory vetting protocol. Before you click buy, every token must pass through a strict safety check to ensure the project isn't a trap. You must carefully analyze the token distribution. If a single individual holds a massive percentage of the total supply, they have the power to collapse the price at will. We use a specific safety threshold. Scan the top holders. If you see a single wallet holding more than 4 or 5% of the supply, that token is high risk and should be avoided. If that large holder decides to sell their position, they will drain the liquidity, instantly crashing the price and leaving everyone else with worthless tokens. Finally, check the qualitative data. Scan the live project chat for red flags, like developer complaints or widespread fear and doubt. This vetting process is the primary difference between those who trade for profit and those who consistently fall victim to rug pulls. Step 4 is the execution. You enter the trade at the exact moment the volume spikes and the safety checks are clear. To maintain discipline, you must set a hard profit target. For these rapid plays, we look for an exit point between 20 and 30%. Because of the high momentum in these tokens, these targets are often hit within minutes of your entry. You must avoid the psychological trap of greed. Waiting for higher, imaginary gains is how a profitable trade turns into a loss as the market reverses. You also need defensive exits. If the trading volume begins to noticeably slow down before hitting your target, you sell immediately to secure what you have. If the price reverses and drops back to your initial entry point, you exit the trade instantly. Protecting your principal capital is more important than being right. Mechanical execution is the only way to retain the profit generated by the previous steps. This approach puts the numbers in perspective. A 20% gain achieved in a single scalp compares favorably against the 10% annual return typically seen in traditional markets. Success doesn't require constant trading. Finding 1 or 2 high-quality setups per day is far more effective than forcing dozens of undisciplined trades. By utilizing strict holder vetting and rapid exit protocols, You protect yourself from the most common liquidity traps and the scams that plague the meme coin market. This strategy turns meme coin trading into a systematic process. Configure your wallet trackers and your Discover page today and start hunting for your first disciplined setup.